Welcome, everyone. Thank you for joining us here at GA 2023 and beyond for our workshop entitled Exploring Pathways to Fossil-Free Personal Divestment. I am the Reverend Dr. Leonisa Artizone, Ministerial Consultant with the UU Ministry for Earth and a member of the Rivers and Mountains Green Faith Circle, and I am delighted to introduce you to my friend and colleague, Michael Richardson. Tell us.
Hello, Leonisa. Well, what we're going to do today is we're going to take a look at how our personal finances have gotten involved unwittingly with the fossil fuel industry. And I hate to say, what is causing our climate disruption. So I think you have a few slides here that we're going to take a look at, and then we're going to jump into the workshop. Yes?
Absolutely. So we just wanted you to check out our beautiful, where Michael and I are situated in respectively Ulster and Columbia counties of New York, right? Come visit us in the Catskills if you want more. And while I'm showing you this, I'll let you know that you don't actually have to come see us, because we can bring this workshop to you and your congregation. And at the end of the presentation, we'll give you an email address where you can reach out to us. And so this is the workshop we'll be doing. It's entitled Align Your Money with Your Values. Do you want to tell a little more why it's important that we do this, Michael? And then I can tell you why.
Well, let's take a look at this right from the up front here, where it says align your money with your values. And you can read for yourself where it says that this workshop is going to show people how to move their finances from funding fossil fuel extraction. You can read this, but the point I want to make here is, what's this move your finances? Now, myself, I don't remember ever investing in fossil fuels that I would have to be moving it away from. How did this come to be that my finances are linked to the fossil fuel extraction, production, and distribution system? So what we're going to do today is we're not going to talk necessarily all that much about the problem. We're going to talk about how you can actually get your money out of the fossil fuel banks, away from the credit cards that are funneling money into the industry. And also, we're going to look at your home and auto insurance and, of course, your investments. And for us old timers, I mean our retirement investments.
That's great. Michael has been doing this workshop a lot, and the first time I did it was probably almost a year ago, and it sort of blew my mind about things that are happening that you're not even aware of and why it's important. And I want to express, especially to UUs, that what Michael, when our Green Faith Circle gathers, we talk a lot about the moral imperative to no longer be part of climate destruction. And if these things are happening through your banks or your credit cards, it's actually, as you'll see, a lot easier than you think to make these shifts and clear your conscience and also do what's right for the planet with living into our values. I'm reminded of the fact that for many of us maybe who are watching, we've divested from nuclear warheads, right? We make sure that we don't bank with or bank or invest our money in places that are part of the prison industrial complex, or like I said, war. So taking this one step further into including fossil fuel destruction feels like a no-brainer for us UUs who have a principle. Our seventh principle asks us to remember the interconnected web of all life of which we are a part. And if our money is causing this kind of destruction, wittingly or unwittingly, I think it behooves us to take part. So with that, I'm going to give Michael the screen and we're going to dive right in.
Okay, now, Leonisa, just to underscore, this is a bit of a workshop where we're going to talk about the alternatives. But much of this workshop is designed actually to show you how to use one web page so that when you have your time and you can sit down and actually look at what's going on with your banks, your credit card, your insurance and whatnot, there are tools in this workshop on this web page that allow you to do that research. And if you really want to be popular, wait until, say, Thanksgiving, and instead of watching football, you can break out Mighty Deposits and look up everybody's bank and go help them find a better bank.
That sounds like a great Thanksgiving activity.
Good idea. Okay. So let's get into the workshop. I'm going to put everybody back onto a shared screen. All right. So here we go again. This is the Tivoli Bay. You're looking at the Hudson River with the Catskills in the background. And the reason we're starting here is I want to show you how to get to this tool. So here's our homepage. You can scroll down and read about how Rivers and Mountains Green Faith is in coalition with Green Faith, Stop the Money Pipeline, and Third Act. And you can read a little bit more about how we came into existence and have fun visiting the rivers and the mountains that are around us. But here we are back to this workshop. So you're on the website rivers-mountains-greenfaith.org. And again, we'll get you that information towards the end of the workshop again. You're on the homepage and you go up here to individual divestment and click. This takes you to the landing page that you saw just a moment ago. Here's our workshop calendar for what's going on over the next couple of months and all of our past workshops that we've done over the past 2 years. But what we want to do here is come here to go to workshop. And again, as we said, getting into this, that how is it that I have to move my finances from funding fossil fuel extraction? I really don't remember getting there at all in the first place. So let me start with a little simple story, if I may. It's about Mr. Peabody. And Mr. Peabody owns a coal company. There really is a Peabody coal company. Mr. Peabody comes to me one day and he says, Michael, I have this mountain down in Pennsylvania I want to take the top off of to get to some coal. And I don't want to use my working capital. I want to take some financing from you. So loan me some of your money. I say, Mr. Peabody, I don't think so. That just doesn't really align with my values. No, I'm not going to do that. Mr. Peabody's very, very polite. He thanks me for my time, gives me a wink and a nod and walks away. And he walks down the street and he goes to my bank. And he walks into the bank and says to the banker, hey, I got this mountain down in Pennsylvania I want to take the top off of to get to some coal. Loan me some of Michael's money. And he does. Now, that's not really too much of a story. It's actually how it works. We use banks. Why do we use banks? Most of us, I think, use banks because we want to have two things. We want to have convenience, want to be able to get to our money. And we also want to have security. So how should I say, nothing's more convenient than a shoebox of money in my closet, but I don't get the security. So I go down to my bank and they give me the convenience. I get a debit card and a credit card, and they have reasonable banking hours Monday through Saturday. And they give me security by even insuring my money through the FDIC to $250,000. This is a pretty good deal. I'm going to use a bank. That's all I ask of them. Nothing else. I give them my deposits. Now, is that a few $100s or is it a few $1,000s or if it's several $1,000s? They have my money. And they, for the most part, can use the money. That bank can use the money as they so choose. They can loan to who they want to. They can take the profits that they might make off their banking and invest where they want to. No questions asked. Now, I want to fast forward to the latter part of this workshop where we're going to be talking about investments. Again, that's my money that I'm giving to an asset manager to go out and invest. But there I have a very precise, well-defined contract on exactly where that money's going to. So I want to bring that up right now because, again, with banks, it is done unconditionally, where with investments, retirement investments, there are a lot of conditions around it. So let's get into what to do. If here on number one, personal banking, if you bank with Chase, Citi, or these other major Wall Street banks, some of your money is likely being used to fund climate destruction. So how do you get away from, shall we call this, doing harm? I don't want my money out there doing harm. Well, it's pretty easy. Leave these big guys and go anywhere else, and you'll be doing no harm. But wait a minute. I want to go further these days. I want my money to go out and do good. That's a little bit more of a challenge. And what we're going to do is we're going to come over here to My Deposits on this website, and we're going to show you how you can find banks and credit unions that are actually out there doing good in your community. So how do I go from harm to no harm? Simple. Leave the big banks and go anywhere else. How do I go from doing no harm to doing good? Well, I got to do a little bit of extra work. What we have here, and I'm going to just take us on a quick little tour through the workshop so you know where we're going over the next few minutes, is we have the personal banking. And after we're done with this, we're going to go down here and talk about credit cards. And then we're going to come down after that and talk about home and auto insurance. Now, that's interesting. You never thought that your home and auto insurance had something to do with the fossil fuel industry. Well, it does. And then we'll close out here with retirement. Those are the 4 parts of the workshop. And what we do here again is we don't want to spend too much time talking about what the problem is. You're watching this workshop because you want to move your money out away from fossil fuel, right? But still, you may want to have some background information. We recommend our friends at Green America read all about it. Also, our partners at Stop the Money Pipeline, again, read all about it. So here's the tool. You can do this anytime on your own, or you can wait and do it at Thanksgiving, up to you. We have 3 search engines: Mighty Deposits, Bank Green, Bank for Good. We're going to work with Mighty Deposits. Here we go. It's a very simple website, as you can see, black and white for the most part. You can read down here on where they get their data sources and how they're available. This is all non-proprietary. It's fed in by state and federal regulatory agencies. Oh, by the way, Mighty Deposits is a women's collaborative. But you can read here about their data and where they get it, some tips. But let's just jump right into this. Look up your bank and learn about its impact. Or come up here to the top buttons, find banks, find credit unions. Now, the reason that they're separate here, we need to point that out, is when you're looking to find a regional or local community bank or a credit union, you can't find a credit union here and you can't find a bank there. Let's start with banks. And you see you have a very simple website again. I want a bank located in, type in your city or zip code. That is anything. Well, let's say that my sister's moving to Wichita and she wants my advice. We would type in Wichita. Let's look at what this anything is. Down here, you'll see low-income communities, small businesses. It's Native American owned, small farm lending. I call these the good guy buttons. So again, we're talking about going from harm to no harm to doing good. Aha. I like the saying, eat local, shop local. Well, here we're going to talk about bank local. And here's why. Let's go ahead and look up a bank in our community. Leonisa, do you have there where you live a regional or local community bank?
I do. Let's check out Ulster Savings.
Ulster Savings. So just type in ULSTER. Sometimes it helps. How easy is that? It pops right up. We click on it and we do go. Now, what we find here is Ulster Savings Bank is putting $64 of every 100 that you deposit, 64%, is going back into the community. That is 70% above the industry average for banks. 100% is staying in New York because Ulster Savings Bank only banks in New York. And look at that. We have 3 of those good guy buttons. Let's see more about that. And you see here that Ulster Savings Bank is very heavy in housing. In fact, Leonisa, back around 2005, I bought a home outside of Kingston, and I actually got my mortgage through Ulster Savings Bank. Go figure. They're known for home lending. And they also do a lot of small business. They're into construction, and they go into large farms. Not that there's a lot of large farms down in Ulster County, but there are some good sized apple orchards. So this looks like a kind of a place that if I saw my money in Chase Bank, where a disproportionate amount of it is going off to fund industries that that don't align with my values, and I move it over to something like this, I feel pretty good about this bank. So let's back up here a little bit. We can click off or get back there somehow. Let's go find, let's take a look at one of the big bad banks. Which one do you want to pick on today?
Let's do Chase, because I think a lot of congregations wind up banking with Chase.
All right, so CHASE is actually JP Morgan Chase. Now, a bunch of things. Let's go with the main bank in Columbus, Ohio. Exactly. You ready? Uh-oh. I see a bad guy button down here. Top funder of fossil fuels. Now, warning here. Simply because you don't see that button doesn't mean you have a fossil-free bank. This is top funder of fossil fuels. Let's use this as an opportunity to talk about the community banks. This is a category. You have Wall Street banks and community banks and credit unions. Community banks and credit unions, let's call them same thing. With your community banks, you really have two or three types. Let's just talk about two. You have the large regional community banks. They're still community banks. And then you have the local community banks. So some of you may be familiar with Key Bank. They're out in Washington State. They're based in Ohio also, and they do a lot of banking in the Northeast. That would be called a very large regional community bank. The Ulster Savings Bank that we looked at is known as a small community bank. So here we have Chase, and you can see here $19 going back into the community. And this is what you expect. Wall Street banks have a purpose and a reason for being what they are. They exist for the purpose of providing complex financial services and systems to Wall Street companies. So really, if a big Wall Street company has to do international banking and have all these complex services for transactions and conversions and regulatory tracking for international banking, there's not really an alternative. Ulster Savings Bank cannot meet those needs. In fact, even the First National Bank of Omaha can't meet those needs. It takes a big Wall Street bank to do that. But why do we end up using them? I have lots of friends that have used Chase, Wells Fargo, Bank of America over the times. And some of them maybe got into the banking because that's what mom and dad had, or maybe that's where they got their student loan, or maybe that was where they got their first mortgage on a house. But somehow, those of us that could do just fine with banking local end up banking with these big corporate banks. We don't need them. Let's just take a little look here, though, on the Seymour data. Again, we don't expect to see community banking because that's not our community financing, because that's not why they exist. And look at this. They're below the industry average on everything. And the reason here again is they're busy out there investing in Wall Street international services. Let's take just a moment to look at what some of the other really good banks are doing. Let's just say, I think we can come down here to the bottom. Yeah. Browse around this website. In the wintertime, you can have a lot of fun with this. In the summer, we have other things to do, but in the wintertime, I take a look at this often. I just clicked on that button to see what's out there on sustainable banks, what they are, and a list of eco-friendly options. I like this. Browse sustainable banks, browse bank. Oh, here, we're fossil-free workshops. Let's click on this one. And here we get 13 banks that Mighty Deposits have selected out for us that we might be interested in. These are featured banks. And look at all these good guy buttons over here. I like them. And here you see $80 of the 100 invested. Now, let's use that as an opportunity to talk. Personally, I am looking for a community bank or credit union that is putting at least $60, 60% back into the community. And I really don't want to see a bank that's doing much over 80. And the reason for that is they better be holding back a certain reasonable percentage for other types of securities investments. We used to always use the example here of It's a Wonderful Life, where Jimmy Stewart's there and everybody comes in to make their withdrawal and he has absolutely no money in the bank because he's loaned the whole thing out 100%. And so we don't want that. So $80 on 100, that's pretty good. These days, of course, we can use the examples of First Republic and Silicon Valley. But here you can see Ponce Bank is a New York bank, Carver, another one. Spring Bank is often known as the greenest bank out there. We're not going to spend any time on this, Leonisa, but see here where it says B Corp, and up here with National B Corp. You might make a little note to yourself on the side to Google to look up B Corp sometime. This is a clearinghouse for sustainable businesses. Joanne and I use this. We do our research when we're buying textiles or even laundry soap. We get our laundry detergent now from Grove, and Grove is a B Corp. So they've already vetted out. This is, how shall I say, the consumer reports for green people. But look at all these other good guy buttons that are sitting here for Spring Bank. Beneficial Bank, we're going to talk a little bit about when we get to credit cards. They're also a B Corp. And down the line here. And you'll even see, for those of us that live up in my neighborhood, we have Berkshire Bank, which is based out of Massachusetts.
I love that. Take a moment too. I love this, Michael, this link especially, like, because it really gives, I know, especially among our religious community, there are things that people really carry as strong values that are directly aligned with what we believe and hope to embody and live into. And by seeing it in this menu, it makes it really easy to say, I'm going to pick a bank that, you know, aligns with, you know, maybe it's not just fossil fuels. Maybe it's also about wanting to have a Black American owned bank, right? Or something that invests in a certain type of things in the community. So this is super useful for folks to make really informed choices that align with their personal and congregational beliefs and needs. So
and it really is helpful up here when your sister moves to Wichita and asks you what bank to go to.
Indeed. You don't have to know it all off the top of your head, right?
And again, I just want to take a real quick peek before we get out of here on credit unions. And here I'm just going to type in Greylock Federal Credit Union, because this is where Rivers and Mountains actually has a modest account for us to do our demonstrations and whatnot. So here we have Greylock Federal Credit Union. Whoa, 87. Now, interesting thing, if this was a bank, that would be way above 51%. And the thing is, a credit union actually has in their charter to invest in communities. So there's a different standard. I'd have to go get the real numbers here, but $87 of 100, if it was a bank, would be somewhere up around 80% above industry average. Whereas you see here with the credit union, it's 50% above industry average, but still above industry average. And you see here on the local details that they're on the good guy buttons, low income communities, housing, farms, public works. We like Greylock. But this is just to give you an example of, if you're looking for credit unions, go look at that. And let me just say that if you like the idea of eat local, shop local, bank local, a local community bank or a local credit union fits the bill. But there's another value here. If you really like the idea of democracy, if you are a depositor in a credit union, it's your credit union. You vote. Greylock has become very, very progressive on immigration, LGBTQ, and other very progressive issues because its members are progressive and they vote that way. That is their mission. That is their image. Okay, so now you have a useful tool, mining deposits under personal banking. Let's go into the next part.
And while you're scrolling, Michael, I'm going to let the folks who are watching know that they can feel free to just pause the video right now, replay, type in what they need. If things get confusing and you forget, you always can refer back to the video. Of course, you can reach out to us, but it's really nice that this is recorded so they can watch it over and over again.
So when we have credit cards, even though we're still talking about the banks, it's a different flow of money. With the banks, it was real easy to understand. That's our money that we put into the bank, and the bank then turns around and loans it out to other people. With a credit card, we're still dealing with the banks, but the money flow is altogether different. So what we want to talk about are two different things. One is, well, what money are we talking about? And that is the annual fee, the user fee, and the transaction fee. The other thing we're going to talk about is branding and issuing. I'm going to repeat that. Branding and issuing. Who is branding the card? Whose name is on it, like First National Bank of Omaha here with the Evergreen card. And then who's issuing the card? Well, in this case, it also happens to be First National Bank of Omaha. So the brand and the issuer is the same. But we're going to look at other cards. Let's scroll down here to Amalgamated Bank. Well, this bank decided not to get into the credit card business. They still make it available to their depositors, so they brand it, but they don't issue it. This one happens to be issued also by First National Bank of Omaha. So we're going to talk about that. So with what money are we talking about? Let's look up here what Fran has to say about it. When you use a mega bank, you're bolstering all the things the bank's loans support, from clear-cutting forests to new coal-fired power plants to predatory loans. Community banks and credit unions provide the best opportunity for card holders to avoid supporting bad practices and to positively impact communities. So what's happening here is you are going to spend some money using your credit card. Once you do that, it's no longer your money. But yet you've still caused something to happen. It's almost like in our day-to-day actions, the little things that we do have cause and effect that are going to ripple through all other things in existence, way into the future, not only the present. Some of us call that the karmic reaction. Well, this is exactly the same thing that's happening with your credit card. You're going to spend some money, and is the ripple effect going to go off into something that's causing harm? Or is the ripple effect going to go off into something that's causing neutral effect, or maybe even positive? It's a little hard to get your credit card directed to do positive, but you could at least get it directed so it's not doing harm. So let's take a look at how you do that. First of all, what's the money? The user fee. Some of us have credit cards in our pocket where we pay an annual user fee. Some of us don't. But let's say that the standard fee is roughly $70 to $100. Let's call it 70. Not a lot of money. A bank's not going to go off there and do a whole lot of damage with $70. But I tell you, if they have 1 million cards out there, now they got $70 million to go out there and do some harm with. I don't like this idea. I don't want Wells Fargo getting all that money. Let's not do that. Okay, let's look at the second bucket of money, and that is the user charge, the user fee, the interest they charge on the debt. And as you know, 13%, hello, 19, what it's outrageous what they charge on the debt that they're carrying. And Americans carry a lot of credit card debt. Now, I hope that most of us aren't doing that anymore. I had my time when I was in college and when I bought my first house and some other times in my life where I carried credit card debt, and it got me through. It's something I had to do, and it worked. Fortunately, I don't have it anymore. But again, a lot of Americans do, and seriously, trillions of dollars are in play here. Now, unlike the bank loan up above, when we talk about banking, there the bank is loaning our money. Here, it's now their money. They may be loaning it out, but they're probably investing. And they invest disproportionately. All these banks, read all about it, invest disproportionately in fossil fuel industry. They also invest in hospitals and other good things, but disproportionately, they're out there investing in fossil fuels. So I don't want to be dealing with user fees, and I don't want to be dealing with annual fees. But I still have this thing called a transaction fee. And that means that every time I make a purchase, a certain percentage of that purchase is going to go back to the bank. I'm going to use the number 3%. So if I go to a restaurant and we have a $100 tab, and I give my credit card, that restaurateur is only going to get $97. The other $3 is going to go to the credit card issuer, the bank that issued, there's that word again, the card. Now they're going to turn around and give me back a little bit as the consumer as an incentive to use their card. And that's either points or cash back. And again, some of them are giving 1%, some are giving 1.5%, some are getting 2%. Some specialty cards, if you get gasoline, it's 3%, or groceries is 5%, and other things. You're familiar with what I'm talking about. That is the transaction fee. So that's the money that is being put into circulation every time we use our credit card. So if I don't want it going to Chase, Bank of America, Credit One, what am I going to do? Well, what did I do with the bank? I left them and I went someplace else. It's the same solution here. Leave them and go someplace else. Now, here's the problem. There are scads of local community banks and local credit unions out there. There aren't so many other alternatives to those that are issuing cards. So here's where we're going to spend the next few minutes. PCM, First National Bank of Omaha, Beneficial State Bank, CUNA. First National Bank of Omaha and Beneficial State Bank are brick and mortar banks. They're regular banks based in Omaha. Beneficial's out on the West Coast, Washington, Oregon, California. TCM is not a brick and mortar bank. You and I can't bank there. They exist for the sole purposes of issuing credit cards for other institutions, including banks. CUNA is exactly the same thing as TCM, except for their clients are credit unions. So CUNA is for credit unions, TCM is for banks and other institutions. These are banks that do it elsewhere. So let's take a little bit more of a look at that. Oh, by the way, while I'm scrolling down here, our friends again at Green America, read all about it. So we actually like to recommend this credit card. This is a credit card that is branded and issued by First National Bank of Omaha. It's a 2% cashback card. Here's another one for those of you out on the West Coast, Beneficial State Bank, their climate card, branded by First Beneficial State Bank and also issued by them. Oh, the question comes up, well, what's this Visa? What's this MasterCard? Visa and MasterCard, you see all the cards that are on the screen here say Visa, that's just by chance, are just the processing system. They're not a bank, and they're actually owned by the banks, but they're not a bank. It's just the system for moving the money back and forth. So that doesn't concern us at all. It's not in the fossil fuel spectrum. So here again, you have a card that is branded and issued by this bank, branded and issued by that bank. I mentioned here also Key Bank. Now, Key Bank is a large regional community bank. They also brand and issue their own card. Key Bank is not as clean as we'd like them to be. They actually partnered up with M&T Bank a few years ago to put in a frack gas pipeline out by Buffalo. But they're very, very small players in this. And how shall I put this, Leonisa? I got this dance I need to go to, and I want to look good. And I don't have any clean shirts in my closet. So what do? I go to the hamper and I get out the cleanest shirt in the hamper, right?
Or the least dirtiest shirt.
Yeah. So there you go with Key Bank. If this is where you want to bank, they have a lot of good things to offer, but just know that they're not as clean as a freshly laundered shirt. Also, we'd like to recommend Amalgamated Bank. This is based in New York City. It's been around for a long time. They're known in that they were founded by labor unions back in the day. I actually carry this card. I bank at a community bank called Bank of Greene County. They do not brand or issue a card. Their customers don't get a credit card. You get a debit card, but no credit card. So I want a credit card. So I went down to Amalgamated Bank. They brand it, and First National Bank of Omaha issues it. There is a bank in upstate New York called Community Bank. It's a community bank that's named Community Bank. What a convenient name for it. It also uses First National Bank of Omaha. Now, I want to put a little note here that our friends at Berkshire Bank, which we think is a wonderful green bank, they're still tied up in a relationship. Their credit card is issued by Elon Financial, which is part of US Bank, a major investor in fossil fuels. It's my understanding the Berkshire Bank is going to eventually be looking at that a little bit deeper to come up with a different vendor. Let's also, while we're at it here, look at affinity cards. Affinity cards are, you might be familiar with one from Sierra Club. This is our friends at Green America. You can get them from a lot of different organizations. It's a way of passively giving a donation. So what happens here on that 3% we were talking about? Well, here, every time you use your card, you go to that restaurant with a $100 bill, 0.5% will go back to Green America for branding the card, their gift, 0.5%. 1% is going to go back to me in the form of reward points, cash back or toaster ovens, whatever I want. And the other 1.5% is going to go to TCM, the bank that issued the card. Now, with that, they're taking profit, and they're also covering some bad debt. Sierra Club uses Beneficial State Bank. So again, that's a way of giving a passive demonstration, donation. I personally don't like this idea, even though a lot of people like it because it's a way of giving that they don't have to think about. I would much rather get this 2% cash back. See, over here, I'm only getting 1%, and Green America is getting 0.5%. Here, I can get 2% and write the folks at Green America a check. And it's the same thing when we talk about airline points, Leonisa. People say, well, I get airline points. Those points are worth 1%. Wouldn't you be better off getting 2% back and buying your airplane ticket? Oh, and by the way, have you ever tried to use those points lately?
No, not lately, because I've heard just horror stories because everything is a mess right now, right?
Well, if you want to use your cash to buy a ticket, there's no problem. If you want to use your points to buy a ticket, good luck.
Yeah, they're
three stops to San Diego.
right. Exactly. And I want to say too that once you had told me about the NBO cards, I was able to get an evergreen one, a specific one called, I think it's called Getaway, for traveling, which is and no fee, no international fees, and right, because I don't usually use credit cards. And when I learned about this, it was great because I was in Italy visiting family last year, and there were no transaction fees or nothing. Like, it was a nice extra bonus on top of knowing I had a green credit card there.
Well, I'm envious that you ended up getting the evergreen card from First National Bank of Omaha. Not to get too off in a tangent, but if you click on this, it will take you to where you can fill out an application. So not only do we recommend it, we make it easy. We do the same thing for Beneficial, and we do the same thing down here for Amalgamated. But sorry for anybody who's not interested in this, but I cannot get that card. And the reason I can't get that card is because First National Bank of Omaha issues a card for Community Bank, which is in my zip code. And they have a non-compete clause where they won't issue a card in the zip code where they're issuing a card for somebody else. Now, my lifelong friend who lives 20 miles away from me in a different zip code, and my daughter Megan, who lives down by you outside of Kingston, they have that card, 2% cash back. I have Amalgamated, 1.5% cash back.
Look at that, right?
So now, how do you know? You can now take your credit card out if you have one, and you can look at the front. Mine says Amalgamated Bank. So I know who's branding it. It's Amalgamated Bank. If it said Citi Sapphire card, I would know the same thing. So I turn it over, and the Citi card will probably say Citi again, or it'll say nothing. The amalgamated card will say that it's issued by FMBO. So if you have a card that says nothing, that means that your bank or credit union is issuing their own card. Now, just like Fran said up here, if you can get a community bank or a credit union that brands and issues their own card, you're good to go. I got a fossil-free bank, they're issuing a fossil-free card. Fossil-free credit union, of course, fossil-free card. Or you look for where it's being issued by TCM, First National Bank, or beneficial state. Two final things closing out. Store cards, slightly different creature, kind of the same thing. Lowe's, Verizon, Sam's, and some Amazon cards. They're called store cards. Some are being issued by Citi, Bank of America, Wells Fargo. So there's an Amazon card out there that's issued by Citi. But there is also some that aren't. You want to turn over, look on the back, who's issuing this card. If it says Synchrony or Committee, those are just like TCM up here. They are not brick and mortar banks. They exist for the sole purposes of issuing store cards. So these two issue store cards. TCM and these two issue credit cards. Now, last word. I never said anything about American Express. 15 minutes we've been talking, didn't say anything. Surprise, fossil free. American Express is not in the fossil fuel investment banking business. They're in the money transaction business. They are a bank. They move money around. They also have user fees that are way above 3%.
Oh, yeah.
In fact, a lot of places won't take the American Express because American Express charges too much. And they also have an annual fee that's way up there, 100, 150 or more dollars.
Or even higher than that, a couple $300 to $500 if you keep working your way up the Amex ladder, which I
That's
don't
right.
know applies.
Right.
But Michael, you there's another thing on the slide that before we jump to the next section, I think it's really interesting too. You talk about these affinity cards, because I know working assets is an example we have here. And I know there are others that are branded as socially conscious, or mindful practice, but they are branded, but they are with the dirty bank. So I think we should just give a little red flag warning to that, because sometimes we get sucked into thinking something is a really good practice or concept, and then you dig a little, you open the curtain and you find out something else, right?
I'm glad you call it a red flag, because they get a red caution.
They get a red caution.
Okay, we're ready to move on. Home and auto insurance. Now, this was a surprise to me. Little did we know that we were getting our home and auto insurance from a fossil fuel insurance company. I thought it was a home and auto insurance company. Let's start this by comparing them to those Wall Street banks that I said earlier. Wall Street banks exist for the purposes of providing complex financial services to Wall Street companies. And a lot of Wall Street companies are out there exploiting the planet. So they're in that realm. That's where they exist. Well, what do insurance companies do? Any insurance company. They insure things. They insure anything. That's why they exist. So here's how it kind of works. That if I have an automobile, I have insurance. The state I live in, I think most states, require that I at least have liability insurance. My car is new enough that I also have collision insurance. If you take a loan, you have to have collision insurance. Same thing with our houses. Even if your house is paid off, you probably have insurance. It's just too much of a risk to have a loss there. And if you have a mortgage, again, you have to have insurance. Well, if you were a fossil fuel company and you want to develop a new pipeline or a refinery or anything like that, you're going to have insurance. So if an oil company wants to put up a new refinery, they're not going to use their working capital. Again, working capital is for the purposes of going out there and making money on money. They'll go to the marketplace and borrow that money. Now, I'm using the word borrow in the sense they'll go to a bank and borrow it. They'll go to investors and get investments. So they'll go to some banks, of course, to asset managers and private equity to get an investment. Or maybe they're going to get a grant from a government. But none of those institutions will give them any money at all without insurance. And the reason for that is easy to understand. When something goes bad with oil, coal, gas, any of them, it goes bad in a really big way. Think of the BP oil platform, that pipeline in Kansas just here a few months ago, or the famous Exxon Valdez. All of those go bad in a really big way. Now, you would think that insurance companies are adverse to risk. They actually love risk. And the reason is that high risk means high premiums. High premiums, if the actuaries have done their job right, means high profits. So this is a wonderful realm for them to be in. And let's take a look at who they are. Here's the list. You know them: Allstate, Farmers, Geico, Liberty Mutual, Progressive, State Farm, Travelers. They're listed here. These are the big ones. And notice that it says insurers and investors in fossil fuel. Well, we just explained the insurance part, right? These companies need insurance for their projects. They go to these companies and they get the insurance. That's what they do. What's this investing stuff? Well, I used to think in a simple way that the premium I paid on my auto and home went into this risk pool. And then when Leonisa had an accident, it helped pay her claim. Well, it does work that way, but that money's just not sitting there waiting for Leonisa's accident to happen. That's a huge pool of money. Oh, guess what? It's no longer my money. I bought the premium. This is not like a bank. This is more like a credit card. I spent it. It's now their money. What are they doing with it? It's not sitting in the shoebox or in the bank vault. It's sitting in investments, loans, and the like. And where do they invest and put the loans? Disproportionately, they're putting it back into fossil fuel. So here, Rainforest Action Network, get insurance companies out of the fossil fuels. Read all about it. This is going to give you all the information you could possibly want. Also, over here, there's no better source on any of this than Insure Our Future. Up to date, well vetted, worth the read, often quoted. Read all about it here, read all about it here. But here, what are we going to do? What did we do with the banks? What did we do with the credit cards? We left the big guys and we went elsewhere. Well, here too, you go to bank local. What is it? I'm just going to start over. Eat local, shop local, bank local, now insure local.
Yeah.
And here, I'm going to use New York. There's other states, of course, that are in on this presentation. And I'm listing here NYCM, Sterling, Utica, and Preferred. These are just 4 examples of regional or local insurance companies that have been around for a long time, that have a good track record, have been receiving excellent consumer reports as far as paying out claims and having good customer service and whatnot. So how do you get there? If you're looking over here at some of the big commercial ones, I used to be with Travelers, which is the 4th largest investor in fossil fuels. They're also very large up there on insurance. And when I left Travelers, I went to a local insurance agent and I said, I want you to shop me alternative plans, and it can't be any of the big commercials. Get me into a regional or local insurance company, preferably a mutual. Let me just talk about mutual for a moment. Mutual is the same thing as a credit union. The premium payers own the mutual company, just like the credit union depositors owns the credit union. So you get to vote annually on who's the director and what the policies are and whatnot. Of course, you can also do proxy voting, but if you want to do active voting, you can actually have a say in what's happening with those premiums. So I ended up with Utica Mutual. Now, what I ended up with, I went in there, I said, quote me the exact same coverage, 500,000 here, 100,000 there, $500 deductible. You know what I mean. I want to see the same type of policy. I want to see what's the word? Apples for apples comparison. And they came back saving me $700 a year. Now, I was impressed. I had been with Travelers for 10 years. Now, I know the premium wasn't the same, but my head went 10 times 7, that's 7,000. I've been spending $7,000 more than I should have for a company that's taking a disproportionate amount of my premium dollars and putting it to something that doesn't align with my values. I don't like this situation. I went and did my homework on Utica. They still process their claims out by Cooperstown, but they're based in Hartford. And they have, you can look up where they are investing their premiums. And it ain't fossil fuel. In fact, it tends to be the local businesses around the area. You can do your own research.
Yeah. It's so interesting, Michael, because it seems counter. I remember us having this conversation, right? It's sort of counterintuitive. We think that if we're with one of the biggies, we're going to get the best rate because there's more people. And then the reality, as you proved, and me too, right? I called Ulster Savings Bank. They helped me find a local insurance. They got me NYCM, and I mean, I have a 20-year-old driver. So my insurance is a whole other ballgame, but I don't think anybody could save me money at this point. But it's amazing how we just think that the biggies are going to give us the best deal. And when we do a little homework, we actually find out that we get some of the best stuff from local and community. So this is great.
So those of you that are in different states, I'm sad to say we don't have a mighty deposits. So again, up here with the banking, when we went looking around for alternatives and we wanted to find somebody who was doing something good in the community, we could really drill down and find out, they're investing in small farms. When it came to the credit cards, again, we talked a whole lot about trying to find a community bank or a credit union that issues their own card. And if you can't, go find one of these 4. But when it comes to home and auto insurance, we don't have a directory, sad to say. But there are some groups, and we can follow up on this with anyone after this workshop. I'm going to pick on some people down in Charlotte, North Carolina, and some people that are down in New Jersey, that they put together their own little team, their own little study group. And what they do is they get together once a month and they compare notes. So they're out there looking for the alternatives. Now, down in New Jersey, there is NJM, it used to be known as New Jersey Manufacturers. I think you would like what you see there. There's also, even though most of these you have to go through an independent insurance agent, there are a few out there that you can get online or by telephone. And one of them that we like a lot is Amica, based out of Rhode Island. So again, back to what's happening with these study groups I put that have come together. They are out there doing their own research. We often correspond. I help them look things up, and they're developing their own base. I've been in conversation with some folks with Green America and Stop the Money Pipeline about looking for a grant where we might be able to put a directory together.
Oh, that'd be
I want to kind of close out by talking about these bad guys again. Again, go read all about it, but I can't help myself. I said how mutuals were such a good idea. The number one insurer of fossil fuel projects, including the tar sands up in Alberta, and investor, such a heavy investor that if it was a bank, I think it would rank number 4 in investing in fossil fuels, is a mutual called Liberty Mutual. That Inu, with that's tar sands that he's got his heads in. That's not beach sand. But they, interestingly, go figure this. If a mutual is owned by those that pay the premiums, And Liberty Mutual has a disproportionate number of fossil fuel projects that it's insuring. Who owns Liberty Mutual? The oil companies. So basically, through the mutual, they have where they are insuring their own projects. And it's all legal. It makes sense. It's what a wonderful deal. But when we try to get a resolution in front of, say, the people that own Zurich, we can find some success. In fact, even though Zurich is not fossil free, we do actually give them some good stars because they're moving progressively in a rapid way to decarbonize their portfolio. They recently bought Farmers. Farmers recently bought MetLife. So we're back over to that clean shirt in the hamper. Also, Progressive is probably, if I rank these, which they're not, they're alphabetical, but if I ranked them, Progressive would be at the bottom. But Progressive's got another problem. Flo may not have a lot of oil on that apron, but they're the second #1 advertiser of Fox News. Now, that means that up until yesterday, the Flo was hanging out with Tucker Carlson. So when you look at all these, you can do your own research. Berkshire Hathaway, that lizard, Geico, Berkshire Hathaway is owned by Warren Buffett, one of the top insurers and investors, again, in tar sand projects up in Alberta. Yeah. You would not be happy with any of these companies. So get out there, do your research, talk to your independent insurance agency, talk to your consumer affairs people to make certain that they have good ratings, good customer service. I don't know if you've had any experience with NYCM, but I've had a little experience with Utica, and it was every bit as good as what I got from Travelers. Okay. Retirement investments.
Here we go.
Different, but same to what we've been talking about. Different in that, here again, it's we're looking at what's happening with your money in a way in which you can direct it more than you can with any of the above things. You can go find good. And there's been myths out there that if I have these ESG, SRI, impact, whatever you want to call this stuff, sustainable investment tools, that they don't perform as well. That's a myth. We're going to be doing some more workshops going forward on dispelling some of those myths. But here again, you can come over here to our friends at Stop the Money Pipeline. They put together a wonderful FAQ, frequently asked questions, where you can read all about it. Vanguard, State Street Capital Group, and BlackRock, and what's happening with how these asset managers are using your money to invest in fossil fuel companies. Also, our friends at Green America here again have some links that you might find some good information. We're going to close out this workshop with this last button here, Find Fossil-Free Investments. But what we want to do right now is we want to go over here and spend some time with As You Sow. Before we get too far into this, Leonisa, I do need to highlight the bottom here. We are not an investment or financial advisor. I can tell you what bank to go look at. I can tell you what credit card to put into your wallet. I can tell you what insurance that I think is good for you. I can't tell you what to do here. You need to be talking to a financial advisor or else just doing your own research.
Yes. And what's great is we set up the tools, you've set it up. This is great, where you can do that research. And if you don't have a financial advisor, you can just spend the time yourself. Or as I did after I spoke with you and thought I was invested in all the right things, did my digging, and then called my financial advisor and said, here, fix this. And I did all my research, send it to him. And then he did some more digging and made things right, but it depends on where you are. But I appreciate, yes, that we are, this is for information and research purposes only. We are, yeah.
Right. Now, what we're going to be looking at here, what money, we're not talking about stocks. If you want to see your money doing good, go out and buy stocks in a do good company. There. what we're talking about here is those of us that have the 401ks and other types of investments out there, annuities and like that have a distribution of investments into mutual funds, bonds, exchange traded funds, and the like. And so that's what we're going to be looking at here with As You Sow are the mutual funds and the exchange traded funds. But what we have going on is we have these large asset managers. We pay people to manage and invest our money. And the large ones, you've heard all about them. BlackRock, Vanguard, State Street, Capital Group are the four largest ones that are out there. Well, let's tell a little simple story. This is kind of like the Mr. Peabody story that I told earlier. That I have some money and I just don't have any time to know what to buy and what to sell out there. I don't have time to go on to Consumer Reports and Wirecutter and look this stuff up. And I always feel so insecure that, you know, I'm not buying the best of something, or this is going to break down tomorrow. If I'd only done my reading, I would have never bought this piece of equipment. So my neighbor next door, his name is Mr. Jones. He's amazing. He always buys the right thing that lasts forever, that looks great. And everybody says so. So Mr. Jones, I should just do what he does. But I really don't even have time to watch Mr. Jones. So I go out and I hire somebody. There's this guy who has a little business around it. His name is Mr. Fink. And I say to Mr. Fink, listen, I'm going to give you my money and you get a certain percentage. I'm going to give you 1% of everything that you buy for me. But I want you to buy exactly what Mr. Jones buys. So if he buys a new gray all-electric Volkswagen, it better be gray because he didn't get white for a reason. This is Mr. Jones. He's got a reason for everything. If he buys a new Samsung, better not be, it's got to be Samsung because he has a reason he bought that particular one. So you buy exactly what Mr. Jones does. And also, if you see him selling something and I have it, I want you to sell it too because there's a reason he got rid of it. It's going to break down or something like that. So what I'm describing here is me, I'm the investor. It's my money. Mr. Fink is the asset manager. And he actually has a name. His name is Larry Fink, and he's the CEO of BlackRock. And Mr. Jones, he's got a name too. It's called Dow Jones. He's the index. So we're going to be talking about indexes. And all they are is that's something where the asset manager takes my bucket of money and buys and sells whatever is happening in the index. So if the marketplace is buying and selling stuff, I want to follow the market. Now, the broadest market out there is the Standard & Poor's 500. It is the market. It's made up of lots of good stuff, and it's made up of a lot of things that we don't like. It's the market. And it grows in certain areas, and things come into it, and it shrinks in some areas and things go out of it. Over the 30-year span, it performs at around 10% return on investment. So what Vanguard did some years ago, better than anybody else, is they programmed a computer to follow the Standard & Poor 500. And they went around to pension funds and even to local folks and said, if you put it into this Vanguard fund, we're going to follow the S&P index, and we're going to charge you, are you ready for this? 1/10 of a percentage point to manage your money for you. And over 30 years, take a look, it averages around 10%. This is too good to be true. I mean, I'm basically going to be making 10% on my investments, and it's only going to cost me 0.5%. I like this idea. But what they're doing is they're putting you into a market that has things that you agree with and you don't agree with. So along comes, that's called a passively managed index. So passive that it's done by a computer. We call it a robot. When you start to say, but Mr. Jones, Mr. Fink, no, I don't want that in my index. And I don't want that in my index. And I want you to put that into the index. I'll put this one in here. I like this one's really cute. Put that in. Now I'm starting to actively manage the index. Passive manage, active manage. And guess what? Active manage takes something more than a robot. It takes a person. And persons have a way of wanting to have salaries to raise their family and whatnot like that. So it costs me more. And I could end up paying not 0.1%, but maybe a 0.5% or a full percent or 1.5%. We'll look at that here in a moment. But let's get into the nitty-gritty of this tool. All right, so here you know where we are. We found our way over to the home page through individual divestment. We want to go to workshop. We scroll all the way down to the bottom of the page, and here we find, as you sow, click. Now, I'm going to spend 2 seconds here, I hope, on the menu. Got it? Tutorials. You hate tutorials? I do. This tutorial called An Introduction is worth every minute. Forget about the rest of these. I hate tutorials. This one is worth every minute. So click up here on menu, find your tutorials, spend some time there. You'll like it. Also, there's other things you can fish around here. This is going to be on fossil fuel. They have it on deforestation, gender, weapons, and they go into tobacco and prisons as well. So you can find more on that. We're not going to spend any time on that right now. So back here to where we were, search, up we come. And you see here, are your savings invested in fossil fuels? Search funds from your 401k, retirement plan, or your personal portfolio. And you will see mutual funds and ETFs. All right, so search funds by name. That's pretty good. Nothing's better than ticker. You know, you're looking at the real thing there, or manager. So I'm going to type in Vanguard. We were picking on them a little earlier. Now they do have, you have to clear this out. There we go. So what am I looking at here? Let's take fossil fuels, performance. Oh, I see there. Sustainability. Oh, these are those other things like weapons and stuff. Okay, let's go back over here. Vanguard. This is my asset manager. What's the second word here? Bailey Gifford, FTSE Global. Well, some of these are the indexes. Bailey Gifford is an index they're using. Bailey Gifford is known for having a very green portfolio or index that they follow. Now, if I want to just look at Vanguard in general on how many fossil-free funds they have, I can toggle here. And you see I get an assortment of A's. Click down, click down. They don't have a lot of completely fossil-free funds, but they have a few. Now, some of them are, of course they're fossil-free. They're real estate, they're healthcare, and they're technology. They're, by their very nature, aren't into fossil fuel. So I'm interested in consumer staples, or even if I can get out of consumer staples and get into some, whoops, sorry about that. Sensitive pad. A more diversified fund I want to take a look at. A consumer discretionary fund or something like that. So across here, the A means there's no fossil fuels. These mean here, they're not investing in fossil fuel banks. Here, they're not investing in fossil fuel insurance companies, the Mutual and the like. Do they have a sustainability index? Now, this is kind of interesting. Out of all the A funds that Vanguard has, there's only one that has a sustainability mandate. What does that say about Vanguard? And they're probably getting it because it's the Bailey Gifford index. But over here, like what's this clean 200 thing? Remember, we want to see for harm, no harm, good. Here's my good index over here. So let's take a look at what that does. If I go over here to the Clean 200 and click on it, it's going to show me exactly that this is investing in 5 holdings Oh, if you want to know what Clean 200 is, just read all about it down here. It's an index that's been put together by a research group on what they consider to be fossil-free, renewable, clean energy technology, whatnot like that. So they have 5 holdings making up 22% of the fund, and 22% may seem like a little, but actually that's kind of a sweet spot. In a diversified fund, you want to see somewhere between 13 and 25%. And you can see here that they have technology, some utilities, consumer cyclical. Oh, that's Tesla. So they're into batteries, industries, Ecolab, and like. Now, if you want to know more here, you have to look these companies up. But you know exactly out of your investments, what percentage of it is going into these businesses. Now, why this tool is so valuable to us is let's go back and look at a dirty fund. Let's really pick on this one. This one has 37%. It also has banks and insurance. So we pick on this one and we want to see why it's getting the F rating. Well, 37% of the investment is going into these 14 holdings. And here are the companies. So you can actually drill down. So what coal companies are there? 20% of the portfolio is going into coal. And you can see exactly where they're going. So again, I'm showing you this rather quickly. We're not going to be able to do any specific research here, simply because we're showing you how to use this tool where you can go look up a fund and go through these different factors. Let's look, Leonisa, do you have a fund to look up?
You know, I meant to pull one of mine, but I'm trying to think off the top of my head. Would like a Parnassus like fall under that? Could we?
Look at that. It fell underneath that. Parnassus, we're going to close out with. This is a mutual fund and an asset manager that I think you might find some good investments in. And let's take a look at what I did. I toggled back and forth, so I got their top 4 there. And you see this USSIF? Read all about it. This is put together by asset managers and financial advisors who are doing green investments, and they have standards that they meet for a sustainability mandate. And you can see here that this is a Morningstar. This is a USSIF. When we were back over in Vanguard, they all just had X, which meant they don't have one. Now, you can see here that Parnassus has a core equity institutional fund that's getting a B rating. The reason they're getting their B rating is that they're out there investing in some banks. But you might want to take a look at it, see what's going on here, because they also have a good Clean 200 rating. But this mid-cap growth is one that's worth kind of looking at. They're not doing a lot of clean energy investing. But over here on their growth equity institutional, that's up there. So let's take a look. And of course, they're clean across the board. How are they doing on 200? Apple, Alphabet, which is Google, technology here, Workday, Canadian Pacific Railway. But of course, whenever we're looking at our investments, we want to look very carefully, at least our financials are at performance. Well, here again, look at this Parnassus mid-cap up here. Right up there around that 10%. Didn't do so good in this category. Here's a core equity institutional, 10, 11, 12, 12, 17. Now, most financial advisors, or even yourself, don't pay a lot of attention to 3 years because quite candidly, everybody did good over 3 years. And don't pay a lot of attention to 1 year because quite candidly, unless you were in fossil fuels, everybody did pretty badly. In fact, it makes a negative 6.95 look good. It's not as bad as some of the funds I had that tanked down 18, 20%. They're back. But again, Leonisa, to show you the value of the research that comes together from As You Sow is the ability to really drill down and see what's going on with your funds. Now, most of the folks that we work with, the financial advisors, they use As You Sow, but they don't use only As You Sow. They will use some other resources to analyze the exposure that these funds are having to fossil fuel. Some companies are out there, you might have a fund that gets a C rating, but that fund has been purchased by an asset manager who's turning that company around to green. You're not going to find that on As You Sow. You're going to have to go do some other research. So in our closing minutes, let's take a look at this last tab. So we're all the way down at the bottom. What am I going to do? Now, I actually use a financial advisor, and I kind of know what I'm talking about here, but I still like the idea of using a financial advisor. How do I find that financial advisor? So here I'm clicking over onto this web page from Green America. And here they have these boxes: financial planners and investment consultants, asset management firms, and mutual funds. So back when I was telling my little story, here's me, here's Mr. Jones, or excuse me, here's Mr. Fink, and over here is Mr. Jones. So let's go and take a look at financial planners and advisors. Now, it's a simple list, but this is where your money can change the world. Learn more about the socially responsible financial planners and advisors. Amalgamated, remember we talked about them, Amalgamated Bank, they have financial advisors. Maybe your bank does. In fact, I think your bank does, Ulster. My bank does as well. Yeah, they do. You can scroll down here. Hanson's, that's out in central New York. It's all women's financial advisors. Horizon is nationwide. This is my very dear friend, Jeff Scales. They're now known as Longwave, and they're working with us on that workshop we're doing for endowment investments on Friday. Here, as I scroll down, we have Sustainable Wealth Advisors, and you'll see here Mr. Harry Moran. Well, Harry Moran happens to be my financial advisor. Talked to him this morning. Now, most of these folks here are going to ask for a portfolio of around $250,000 to $1 million. I know Harry is at 250,000. Jeff and his crew, they're basically up around 500,000. Horizons, most of their advisors went $1 million. And they're going to charge roughly 1% to personally manage your portfolio. So you're not going to be using these passive indexes. You're going to have very tailored, holistically designed portfolios. But this is worth taking a look at, shopping around. I think a lot of us have been frustrated with my financial. I've had 2 financial advisors that I left because they just wouldn't listen to me.
Yeah, I think that's an interesting point. I was mentioning mine. We've been friends since the 6th grade. And what's great about my financial advisor is he knows this is of central importance to me. And so he listens to me. He takes it very seriously. Like I said, I do research, and then he continues the research and does it right. So I think it's really important. I don't know, who's listening that has financial advisors. Like, I certainly don't have a heck of a lot of money to manage, but that's Barry's whole purpose, is to try and make sure I can retire one day. But it's really important to find someone you can have this relationship with who actually values your values in this process. And I think that I've heard people saying, oh, no, they're doing this for me, and it's in these ESGs or whatever. And then I say, maybe ask them to dig a little more deeply and see what you find out, and see if they'll listen. And so that's a whole other conversation we can have, but I think it's great that we at least have options for folks to start their research on.
Well, and I'm glad you brought up the ESG, and it is a whole nother workshop. As we know, there's a lot of greenwashing going on in the ESG, and what is called ESG is not necessarily so. Quick look at the asset management firms here, another box to click on. So these are asset managers, so that you're not using Vanguard, you're not using BlackRock or State Street, and you've heard of some of these out here. Amalgamated, again, is that bank. One that's out there that we hear quite a bit about over time is Trillium. I'm really big on them. But some of you are familiar with Calvert. I have a very small Calvert fund. They go way back now. I hate to say Calvert was recently bought up by Morgan Stanley. Now, fortunately, Calvert still functions as Calvert, even though they're owned by Morgan Stanley. But sad news for Calvert's been doing a lot of good stuff. So here again, you can click and do your own research. Let's just go to the next tab that's there. So we had me, we had Mr. Fink. Let's go look at Mr. Jones. These are broad-based mutual funds that exclude fossil fuel companies by policy. It doesn't say fossil fuel banks or fossil fuel insurance companies. These are fossil fuel companies. And you'll see some out here that we know very well. Green Century, which is actually managed by Trillium. The Green Century, you can get this online. And this is something that anybody who has only a couple of $1,000s or $30,000, they can't get to an asset manager, but would like to say, I'm in a realm that is thinking the way that I'm thinking. Go take a look at Green Century online. Oh, look at this, Parnassus. I mentioned Trillium just a couple of moments ago. And then here, this is the old PAX, Impacts they're now called. My partner, she has investments there as well. So these are broad-based mutual funds. And what I mean to say by this is that gone is the time when we say there aren't alternatives out there. There are progressive, environmentally conscious financial advisors, there are asset managers, and there are mutual funds that are performing at the market. And let's just comment here. The goal is not to beat the market. The goal is to get as close to performing with the market as we can. And that can be done.
And I appreciate you saying that, because I've been in conversations with either congregations or young adults or colleagues, and you started off the workshop saying like that there's some prevailing non-wisdom that if you invest apart from these negative things, that you're just not going to make enough money, right? And I think I've no, it's not true from my own experience with investing for, well, however long I have. And your point of doing this research, but I still think that comes to a question of, what we value, right? You may want to make loads and loads on your investments, but at what cost, right? Like if we are really committed to living into our values and to the moral imperative of caring for the flourishing of all life on earth, then we do have to make those choices. But what we're seeing now, as you've pointed out, is that, so these responsible green funds do not equal less return. And I think that's really, I just feel like we need to reiterate that.
So in closing out, what we've just gone through here for the past 90 minutes is we covered a lot of territory, covered a lot of terms, some of the terms, new terms. But again, our main objective in starting this was to give you some vocabulary and also show you where there are some tools that you can go do the research yourself. But Leonisa, we want to take this even further by helping people out as they're doing their research, yes?
Absolutely. So I'm going to go to my screen share for a moment and just put a email address here. This is the easiest way to do it. You can find us, Rivers and Rivers hyphen mountains hyphen green faith. That's long and wonderful, or you just send an email to rivers.mountains@icloud.com. And if for some reason that doesn't work, or you lose that, or someone tells you, you can always find me through UU Ministry for Earth, and I will make sure you're connected. But Michael loves doing these workshops, as you can tell. And from our homepage, you can see how many he's done. And we would love to spread this news among UUs and beyond. So don't be afraid to plan something and open it up maybe to the interfaith community, like in where you live, right? So you could have it hosted via Zoom at your congregation, but you can open it up to beyond your UU congregation. You can have friends, families, and other interfaith partners that you think have the same commitment that you do.
And Leonisa, we just did the comprehensive 90-minute workshop. What is more popular, and I actually prefer, are 2 workshops. and they're each 1 hour long. So the one workshop, 1 hour, we cover banks, credit cards, and home and auto insurance. It allows us to spend a little bit more than the 45 minutes. We can get an hour on that. We can get a little bit deeper, look a few things up, talk about your insurance company. And then we have a separate workshop, usually weeks or a couple months later, that we just do the investments. And again, that allows us to spend a lot more time on as you sow and poking around at options.
That makes total sense. I think that's fantastic. That's great. Well, thank you, Michael. Thank you, everyone, for watching. I hope you learned something. Again, we encourage you watch this more than once. Pause it, do your own research, come back to it, and then find us at Rivers and Mountains Green Faith or UU Ministry for Earth, because we are here to help you rob your bank. Isn't that what you say? What do you say, Michael? We're bank robbers, right?
When people say, I'd like to introduce Michael Richardson and say something, I say, hello, I'm Michael Richardson and I rob banks.
There it is. I love it. So join us in our effort to be bank robbers and help the planet as best we can. Thank you all so much. Have a wonderful rest of GA or whenever you're watching this. Thank you.